this for people who still say where. That is a flag. Goes up, flag down. And it usually shoots up. Usually. Because you have a 3-line strike, support. If it even gets more technical, the bullish, the green candle. Bullish candle, bearish candle. Green is bullish, bearish is red. So boom, 1 bullish, 3 bearish, and then 1 more giant or engulfing candle. That would be a 3-line strike. So here, boom, looking for a big up candle. What time is it? Let's see, it's 5:30. So the market's closed right now, but it's just showing. It's on the 15-minute, so let's go to the 30-minute too. Excuse me. Delete that. See, you have a trend line too, the blue trend line. Here's another trend line, I'll make it a different color. I can't see it. Yeah, always. So then you have this one up here. That's another trend line. Boom, broke it, shot up. Broke under. That's what we call a fake out. When it came down here, fake out. But there's still support right here, so couldn't make money on that. Going down. And came back up, touched it, shot back down. Came off the support line. Support line's right here, the white one going down, and then you have the trend line coming across, touch off of that. Another indicator is going up, comes down again, trend line, touch. See, I broke through the trend line, came all the way down here, but that's a wick, so you have to, if you get in that, you have to get back out. But you usually want to be in this, like, ideally up here when it first touches, but that's iffy because it didn't wick. You see? So it was like 50-50 right there, kind of. Whenever it has these wicks like this, it's usually going up because there's a strong level of support. It came down there and shot right back up. Here, a little bit. Here, good. See, boom, boom, boom. All three. Trend line and support. So where do I think this is going? Shit, you tell me. You tell me. See this thing? There's a lot of support right here in this zone. In this zone. In that bottom zone, there's a lot of support. Boom. Came down it all the way, but didn't do nothing. Bollinger Band kept it in. What else do I see? I don't have a lot of lines in here, but that's just certain levels. Once I learn how to use the Fibonacci retracement, then it'll probably make it more clean of a chart, but let's use that just to see it. I like to see the wicks, I like to see certain stuff like that. Just a different indicator where price could go. Definitely is that whenever it breaks out a certain zone. Let's say right there. See, because it never fully broke out of that zone. See up here, touch that, and broke through again, never broke through that. Broke through that and keep going. But that's what you can call consolidation. So you have trend line, trend line, under 16, trend line, so trend line, trend line. These are trend lines. Then you have consolidation. You have consolidation. And consolidation is when the market's just going back and forth, back and forth. It's like undecisive in a way, if you want to put it in a certain phrase or tense. So your trend line's going up, market's trending down right here. And this is a bigger trend line. So that plays a role too. Different areas of zones. This right here will probably come down and consolidate, or maybe even come back up, consolidate again up here. That's another area right here. That definitely could consolidate and just play around at that area of support. So that's why you kind of gotta be sharp with your entries too. I mean, you can get in whenever, you know, but it's definitely get in. Basically, really get out and get in, consolidate, and take your profits. You know what I'm saying? Even if you're in here too, take your small profit, small profit, small profit. This right here could be like 30 to 22. Oh wow, that's a lot of bit. Wow, if you would have caught that whole thing, so boom, it came down to that bottom bar and didn't reject through. You caught that up and stayed in that. That is 119 to, let's say, 244. Let's even do the 260. 119 to 260 is a 20. That's $140 that you could have made right here in that area of consolidation. I like some of that. Yeah. Okay. So I love OCD. I mean, the bottom's different, but this is my area up here. As if it breaks this area of consolidation and breaks through, then that's a big area pushing up. So you have 280 to 690. And it will jump. It really can jump that high. I think it will. Very much so, but you have to be careful because there's quite a few things. The 4 hour. That was that chart right there is on the 1 hour. This is the 4 hour. This chart. So you can see another area of trend lines. Area of trend line. You can even say this is consolidation right here too. Watch. No. Not that way. Boom. Bigger trend line. Oh. Consolidation. See? There we go. See? Consolidation. Got that consolidation. And then see how the market's already doing this consolidation here. I like this to see do another thing up. It definitely could. Because if it breaks up, it's going. But if it breaks down, that thing has 14,442 to 13,655. Obviously, over a course of a period, because these are days. Each candle now is a day. So breaking out of consolidation, or not even breaking out. I mean, you would break out, but it'll need a big push down. Big push down, then it'd ride along here if it was going down, or it could fully drop, but I think it would ride it again. So it'd come up here, come down, come up, come down, but then there'll be an area of buyers right here too to push it back up, obviously, because they really want it to go up. They really want to test this highest overall. Oh shit. Okay. See, this is on the 1 month. This month of July. They could form a doji like that. See, somewhat of a doji came down. Strong area of support. Bunch of wicks down here in the zone. Came up. That right there would have, see, that would have maybe changed my mind, but I don't know how hammers work necessarily. That's a downward hammer. But it kept going up. I like this to come back down. But at the same time, they could let it consolidate a lot or keep it going. But I'm thinking the market's gonna, things are doing well, but then it comes back. 32% gain to log best first half in 40 years. That's another thing, that they could keep pumping it, just pumping it, and then big old drop. But it also takes a while for the news to affect the actual market, in a sense. But there's still a lot in this month. There's still a lot of time this month. It's the 10th. So it already came up here. It broke through, came down and retested. This thing could keep coming up, because that's an area of buying pressure. Very well could be, or it could keep coming down. But a lot of buying pressure came down, retested after it broke this trend line. It can keep coming up to 33. They can get all the way to 15.5. That's $500. No, yes, that's $500 if you caught that for good on a 0.01. Because this has a lot of volatility, as you can see. There's 936,000 volatility in this candle. This last one had 7.4. So that shows you a lot of buying pressure. And once more money gets put into it, because this was 7 million top left, come up, boom, broke that area of trend line. But that's like an area, see. Same area over here, kind of the same deal over here. Area of the trend line, that's like, pretend that's a zone in a sense. Zone from here to a zone like to here. Obviously that can play same thing, but like right here came down, boom, just for the zone. I'm not gonna put the zone there, but zones help you get a visual. That's why I use zones in my smaller time frames. Boom. Retest it right here. Shooting up. That's a lot of bottom pressure.